people out there in the web universe. It's your boy Killer Cam, Coach Cam, Cameron Macias, whatever you choose today. It is the Financial Friday update. And that's what we're gonna make right. I got with my boys Rico, Jeremiah, and my boy Glenn. Please introduce yourselves, gentlemen, for the peeps.
Gentlemen's first, so go ahead, Glenn.
What's going on, guys? My name is Glenn Davis. Happy to be here. Looking forward to kind of having this Friday financial talk with you guys. I'm out here in California, Northern California, as of right now. So,
Phenomenal. And I am Jeremiah, or collectively as people, aka Rico Ramirez, and out here in Northern California myself, and just feel super blessed, man, and honored to actually be here with two gentlemen that I hold in super high esteems. And oh, hey guys, before we start, first and foremost, thank you for your services. Because you both serve. I want to get that out there in the very beginning. Thank you for your service, and everyone that's watching that is a military person. We want to thank you, true hero. So thank you for your service.
absolutely.
Leading up into the holidays. So, anyways, the appreciate you, Rico. Yeah, I mean, I just got done talking to probably about four different veterans, currently serving people today, and that is a huge part of who we like to serve, especially me and Glenn. We're out here in Fairfield, right outside Travis Air Force Base, but we decided we wanted to do this because we feel like there is not enough kind of live financial education from people who aren't on some like major, tele network or someone who's pushing any type of agenda. You feel me? Like we are people who not only enjoy finance, but we enjoy helping people. And so we wanted to kind of bring that knowledge with us to the table, and just do this quick little 30-minute, nothing crazy. Don't worry. This isn't going to be, your money market 4-hour show that y'all see on that you guys see on CNBC and stuff like that. We're going to keep it casual, consistent, education based, and we'll get it rocking. So for our first piece of business, we are going to normally talk about three different things from the week, major pieces of financial business, or news that have come out of the market, whether that has to do with the stock market, crypto, the housing market, inflation rates. This week held a lot of different things. What have you guys seen thus far, during this week?
I mean, obviously, the biggest and heavily weighted, right, and highly expected announcement from Jerome Powell, right, with the Fed, because everyone wants to know where are we headed. What was his
Yep.
mindset? A lot of things, whether it be in the market or even just economically, socioeconomically, are very dependent upon the Fed and upon their announcements. It was speculated, and he delivered. Pretty much, people knew. I guess they had read his speech or whatever, but they
Yep.
could just kind of see, right? It was 50 basis points, 0.5 going up. So, but I think for me, what I saw was that it was somewhat ambiguous. His slated speech, he tried to be strong, but you could just tell there was some conversations and there were some things, you were kind of like, he's not really 100% sure. And so when you don't have that surety, right, and when some
Yeah.
of that belief system is ambiguous, you get what happened, right?
Yep.
What's going on in the market right now? Because he just wasn't sure. It's like, yeah, we're hiking and we're trying to get it under. It was a lot of trying. I heard a lot
A lot of
of
trying.
trying, right?
He
Yeah,
needs
I
to
would.
watch more Star Wars. You need to be less try. You either do or you do not, my sir.
Yeah, only two options. Only two options. Yeah, same here. Just kind of where the stock market is going. Economically, just overall, when we talk about the recession as we're closing out December of 2022, I've been hearing a lot of projections, right? Potentially 78% of a recession in 2023. Just kind of diving into that. And so it's very interesting, man. A lot of interesting pieces out there, to kind of read up on and different things like that. So I will definitely be in tune to the market just to kind of see what it does. I mean, as you mentioned, I have a love in this financial industry. I love it, or I'm
Yeah.
falling in love with it.
Yeah.
The education piece that you talk about is very, very important, man. That's something it's a huge missing link in our community, and this is one of the reasons why I'm equipped in myself every single day, looking at where we're going economically, and just being able to share that information. So
For sure. So I'm gonna pull up the first story that we want to show people. Um So it was that the Dow closes more than 200 points lower, falls for a second straight week as the recession fears grow. So how tell me how you guys feel about that. What do you know about that?
I mean, for myself, like I said, I think a lot of it is indications of something that we've seen or something that's been stated, right? I mean, you've had the CEO of Chase, he's been sitting and screaming this from the top of his lungs, and I think people have been kind of pushing him down and you're just you're a pessimist, you're a pessimist. When actually, I think everything and all numbers are indicating that that's where we're headed. I mean, you see the aggressive hikes by the Fed, right? And you see them trying to get it under control. They're trying to get it back to that 2% inflation. As of yet, obviously, you can't do that without aggressive hikes. So, man, I'm just seeing all the signs that just leads to we're headed toward a recession. And if you go by the actual definition, we've been in one probably, right, for the past 2 months. So you kind of the GDP's been down. So you see all this stuff that's going on. And for me, if we go into this article, what you'll start to see is that the numbers are literally telling you that it's not speculations anymore. This is real. This is real relations.
Yeah. People have been studying this stuff. I mean, I think the first quarter of 2022 that's kind of really when I started diving into more of what the market was doing. Because I remember, a bunch of financial analysts kind of projecting, first quarter of 2023 where we're going. And this, as you mentioned, this is kind of hard data that's showing the direction of where we're headed to.
Yeah, and I mean, and like you said, it's all in the numbers, right? It's no longer speculation. We're looking at it like, oh, cool, like, and I think there's a difference between having a positive mindset and then just being like slightly realistic. So yeah, it's great. Yeah, we went down from 9% to 7.2. Yeah. Hats off. We're still 3 times higher than we used to be. Let's keep it 100.
No, factual. I think what's crazy is that previous, you come from 12, 13 years, right, of a bull market. Everything's looking phenomenal, right? And so it's one of those things where it's like, you're on the Golden State Warriors, you got shooters everywhere, right? They just throw it up from, Steph throws it up from one step in front of the half court line and it's going in and everybody's making threes. That's kind of how it was, right? You could throw any type of prediction. You could go into any type of sector basically, and you were going to make money, right? And so you had 12 or 13 years of repeated growth, and that hadn't happened. And then as you start to see the pandemic come around, now you're starting to see realistic cyclical nature of the economy. And like now more than ever is the time, like Glenn was saying, when we got to start tying into our people that are understanding finances and the people that are here to actually help people understand the finances and to educate you. You can't turn a blind eye to it, right? Because it puts you in a place where, right, what you don't know can definitely hurt you. And we're starting to see that as you sit down with clients, you talk to people about their finances. But, education is key. During this time period right now, education is key in understanding the way socioeconomic things tie into this, the way people's mindsets, right? How the CEOs feel, the competency of people leading different companies in different sectors. All this comes into play. So, yeah, man, I think numbers wise, like, Cam, you gonna get into the numbers? I'm gonna let you go.
I got it right here, man. That's the biggest. That's the biggest thing is it's the foundational build, right? Too many people, I think we have this like. So I don't know if you guys saw it, but I posted about it where I asked, that chat GDP, the big AI that everyone's touting. First of all, they broke it already. I tried to log into it the other day and I could. It said, please allow us to update our servers. The second thing was I asked it a very simple question that, as we know, is touted by a lot of people, which is that the S&P 500 has an average of 10% return year after year. I asked it that, and I asked it in 3 different ways. And each single time it actually came back and said, there is not enough data to support this question. And I think that's one of the things we're starting to realize, especially when we talk about the numbers, right? So as far as the numbers are concerned, This part of the first article really kind of stood out was the sell-off was broad-based with 3 stocks falling for every advancer at the New York Stock Exchange. At one point, there were only 10 S&P 500 names in positive territory.
Wow.
The real estate and consumer discretionary sectors were the biggest laggards, down nearly 3% and 1.7% respectively.
I mean, what is that? I mean, literally, what is that telling you, right? You'll have all different sites, all different types, and all different sorts of gurus that's sitting and telling you about invest in real estate, investing in do. Listen, I'm not here to bash anybody. I'm not here to tell anybody what they should be doing or not be doing. But if we're just running it based off the numbers, that's probably not the place that you want to be in right now, right? Definitely not a seller's market. Buyers, I do agree. Now, interest rates are, be what they may. You kind of got to offset that, right? To see if maybe you're at your peak lows or the lowest amount that you're going to get, because you want to kind of wait till it gets as low as possible for your buying, mixed with that interest rate, right, to where it makes sense. But I mean, just looking at that, it's basically telling you, dude, you're in a recession. Anytime S&P 500, listen to that, 500 companies, and only 10 were positive.
It's 490, guys. Simple math. I know I only went to public school.
I mean, what do we, but it doesn't take, that's common sense. This is realistic knowledge, and it's just common sense. I think that's pretty much, that's telling a lot, right? I like another piece of this, right, where it's talking about the 10-year treasury note, which usually, if you're talking about bonds and things of that nature, people have been shying away from that because you want to get into the more risk averse things and you want to be risky, right? Because that's where your money's at. Well, now the risk averse, right, or the ones that's shielding away the risk, it's looking like stable money is the place to go, right? Stable money is increasing. People are starting to see more value in things that are less risky. Now imagine that, right? And so for me, when you start to get into that, when it moves into that space, it's time for people to maybe readjust, looking at their financial plan, looking at their financial strategies, things that they've set aside for the next 10, 20 years, right? As it's shifting, you want to go back, and the plans that you set 10, 15 years ago, they're not as relevant today. So it's time to rework them. It's time to adjust, and it's time to, have those conversations. That's what I see.
Hey, Rico, you said something that when you said it, the first thing that popped up was technology, like the evolution of technology, right? Like the iPhone that I have, or the iPhone that I
don't want to talk about. Let's not talk about the iPhone you have.
Yeah, the iPhone that I had just 2-3 years ago to the iPhone that was just released.
You got an iPhone 6.
Broke the iPhone 6 Plus. I know what to do.
Stall them out.
I know what to do with my money. You know what I mean? But even with that, like you said, Rico, like what your financial plan was 10, 15 years ago, the direction that we're moving, you have to constantly, adjust and pivot, obviously be, with that, you have to make sure that you're educating yourself so that you can understand, right? And if you don't, right, if that's not your thing, find someone who is very, very versed in that industry, right? Of understanding how money works and how money grows. But just with that, right? 10, 15 years ago, whatever plan you had in place, now with everything going on today, you may have to readjust, right? And I think that's where the education piece comes in. And that's why I'm going to enjoy doing this more with the two of you, right? Because I know each of you have a sincere passion about helping individuals, especially in our community. So education, man, if you're listening on this call, that's my personal challenge to you, is to make sure that you start, especially as we close out 2022, start yourself, because whether you're prepared or not is going to happen.
Yeah. And I think, so first of all, Glenn always make people feel shiny when after he's done talking, right? He's like, you guys are pillars in my life. That's my boy. That's L3 perspective. But so funny enough, so there's a phrase that comes to mind, right? That a lot of people know and loves to say is, never change the goal, but maybe change the process to get to it, or change something, right? Why don't people think of that more financially?
I think they get locked in to stuff that's just been indoctrinated, right? A lot of the stuff, a lot of
Yeah.
belief system that we have for our finances, it's
Yeah.
indoctrination, right? It's brainwashing as you're a part of the corporate cogwheel system,
Hmm.
right? People teach you, and I talk about this all the time, even on LinkedIn. When you go and have conversations with your financial advisors, and they're sitting, and this is no shade to anybody, but when they sit and tell you, stay the course, that's the famous three words of most financial advisors is stay the course. Well, how do I stay the course at 55 plus years old, and
Right.
I don't have the time,
Yep.
right, to recoup that money, and then me not fully understanding that the losses that I've
Yep.
accrued, right, the losses that have occurred to my accounts, I don't have those 20 years, and I have to literally, right, gain double almost in some situations just to break even.
Correct.
Yeah.
So if I'm not having those conversations and understanding that, just as G said, technology has advanced, right? And things have advanced. Your
Hmm.
financial plan is a living document. It's a living entity. It has to
Yep.
continuously evolve. It has to continuously grow. So if you're not sitting and visiting and talking about that and understanding that it continuously has to adapt and evolve, just like us as humans, we have to
Yep.
continue to self-develop, right? We're really very big on that. L3 perspective, same shameless plug. But as you continue to do that, right, and you're learning to grow, your financial plan has to do the same thing. It can't stay the same. It's just it's not good. It can, but it's
Right.
not going to lead you into a place that's beneficial. Here's the thing: when you usually do that, when you don't adapt and evolutionize and revolutionize your plan, guess what? It's usually very beneficial to others and not beneficial at all to yourself.
Yep.
So that's
Yeah.
one thing.
Facts. All right, so we're gonna go to number two. So this is for all my crypto folks. Woo, woo. So another door. Hold on. Aislinn, get the door. Yeah,
The joys
that
of
being said,
life. The
that being said,
joys of life.
the joys of life. That's how it rocks. This is how you guys know this isn't pre-recorded.
It's real. It's real. It's all the way live right here.
So for all my crypto folks, most of us know, the whole shebang with FTX. If you don't, and you've been living under a rock or it's the ocean, you might want to hop on and figure this. So, what happened with FTX is that they went out of business, and not only did they go out of business, they went out in style. I mean,
Mm.
ridiculously. You know, some of the major key players that endorsed them. You got Kevin O'Leary who was rocking with them. I mean, literally the Golden State Warriors had them on their back. And so that being said, like it obviously affected a lot of people when this happened. And so I don't know if you guys saw the video of Kevin O'Leary, but this article
Yeah.
talks about what happened where he was like, my personal opinion was
Right.
that Binance, in some art of war strategery, took
Man.
FTX out, bro.
Man. Like, do you know how crazy it is when you have the two largest, right, non-regulated entities in this space battling? Now, in the art
Yep.
of war, right, you read books and things like that. When you're sitting and looking at the art of war,
Mm-hmm.
now, as horrible as this was for everyone that invested into FTX, and I'm fully cognizant. There's so many, there's a lot of things going on in the background. We won't really get into it, but there's people, there's a lot of horrible things that are linked to this. People
Oh
lost a
yeah.
lot of money, and I would never condone that. But what I'll tell you is this: in the art of war, if you're strictly looking at it from a strategic standpoint, FTX played this out. They played chess to a T. Like literally going in, I'm gonna purchase, right,
Oh,
a
Binance.
sizable,
Binance played it.
huh?
Binance played it to a T.
Oh, excuse me. Excuse
Yeah.
me. FTX got played.
Yeah.
Binance played it too.
Never mind, they on the other side.
FTX got played. Binance played it, like you said, played it to a T, man. They went in there buying up 20%, right? CZ went in there 20% of the company. And so what did that do? That was enough shares and enough bargaining and leveraging power. So when it came to actually liquidate, when this stuff
Yep.
started to show up like it was going to be a problem, right? And
Yep.
if the numbers start coming, so you're trying to sell off, right? And you're trying, and the way that they strategically, right, lowered the value of the coin,
bro,
Like,
bro.
That's
bro,
crazy. You talk about the art of war. There's a quote in the book that says, every battle is won before it is fought, and that's what it is. That's what happened.
I mean, literally. So the even more to that story is not only did Binance get 20% of FTX, they started blocking FTX getting regulated. That's how much power they had, because what happened is that they were asking for certain documents, and Binance had so much control that they were blocking the documents. And so that's why they made the deal to buy out Binance's shares, is because they were literally blocking them from getting regulated at anywhere that they went.
and
Like,
then,
how is
bro,
that?
but it was. I'm just saying, like, you literally have to sit and look at, like, look, this is like the art of war to the nth degree. They played it out
Yep.
so like. This is something, and what I want people to understand is this isn't something that was just overnight thought. This
Yep.
was literally set. They strategically set, right? Built up cash reserves,
Yep.
understood the way that the market was moving, went and moved and did put everything in place. So once they pressed that first domino, everything else just went. Hey, we're going to increase, the speculatory talk
Yep.
over over the FTX, over the coin. It's going to lower their
Bro.
value. They're going to have to come to it. Like, everything was just laid out, and it's horrible for people that put their money into it. But
Yep.
like I said, when you're sitting and looking at the overall chess of this thing,
Yeah.
man, Binance played it. Now, the question I have, this is the real question, right? What does this lead to? Because based on what you're seeing, the whole DeFi thought process, right? And going away from regulation, that's why we all love crypto and things like that. Now, do you guys think, or do you feel that this is headed toward regulation? Because I really do. Thanks to Bernie Madoff, and
Oh,
thanks,
yeah.
thanks to all the people and all the various horrible things that are going tied to this, do you see regulation?
I do. I mean, if you look at ISO, 2022, obviously it ended up getting pushed back, but realistically, that is the regulatory piece. If you look at all the cryptos that are attached to that, those are the headhunters for any type of regulation that's going to happen. And so this is just one more step to that, because at the end of the day, it's like, how does $30 billion just disappear, bro? Like, like Kevin O'Leary in his interview was like, "Where's the money?"
Where's the money?
I don't know,
Where's
fam.
the
It fell out
money?
my pocket. It fell out my pocket, Kevin. I'm sorry.
30 billion.
Oh man, that's how it be. So all right. So our last article, as we kind of wrap it up. So the chief investment officer at the world people, not America, the world's biggest hedge fund, says we're headed for a recession that's double the normal length, and it has a lot to do with China. So this came out of Bridgewater Associates, the chief investment officer, and he says, warned this week that during periods of high inflation like what the U.S. economy has experienced today, recessions tend to last longer unless central banks slash interest rates quickly. So we're looking at like two different things now, because, the Fed, we got our boy Jerome. Our boy Jerome, he says,
Jerome.
and it is a two-sided thing, because realistically we do need to bring down inflation, and that relatively comes from those higher rate hikes. But at the same time, so I read another article, and it's not in here, but it was talking about how the reason why like so many industries are still booming, especially like the luxury item industry, is because the recession has pushed so many people over the age between 21 and 35 back into their parents' house, freeing up income. Right. So it's like a ghost kind of. Like, it's not that these people have more money, it's that people are becoming less and less independent because of the economy.
I agree.
Yeah, I see it. I mean, just in my neighborhood, I've seen an increase in families moving in with each other. From the adult kids moving in with their parents, just in my neighborhood. That's definitely Definitely facts. And this kind of goes back to what I was saying in the beginning, as far as like when I was looking at the first quarter of 2022, for the predictions of 23. This is again another article validating that. It's very interesting, man.
I feel like it's a two front war, right? Anybody that knows war history, you get
Yep.
somebody in a two front war, and it's just a time. It's not a matter of if, it's just when. If they don't have a significant amount of soldiers to put, and put, wherever it's going. I mean, unless I guess you're Russian World War II, right, or something like that. But in most cases, and you guys know this coming from the military, two front war just equals a loss for the person that's trying to fight, because you're spreading those, spreading your actual men and the inventory you have of everything on two fronts. And so that's kind of what's happening to the economy. And then you see, it's taking just the hit that we're taking, and what you start to see with China. China is usually very good just based upon their economic. It's weird, right? They're communistic and they're political, but then kind of capitalistic hybrid type something going on with it. Who knows, right? And then Beijing throws in a whole nother thing, right? And Hong Kong is its own place.
Yep.
But what you start to usually China, what they do is they help with deflation, right? They kind of keep things based upon their regulatory standards and things. They kind of offset that. But now the central bank, China's opening back up. And as they start to open back up, you see commodity prices that start to rise, and then you can't offset that because you've increased rates. So the borrowing power and the purchasing power of these companies and different things, you see everything shifted. And so things are going in the wrong direction, and the Fed is just kind of stuck there in the middle fighting that two front war. And so as you go and you're talking about, literally, this is what the guy from Bridgewater, and what's really crazy is that Ray Dalio actually helped to open a lot of those companies over in China. If you read Principles, he tells you about, I won't even go there. Love Ray Dalio. But what I'm saying is it's kind of crazy, right? So maybe we should listen to this guy, because they know what they're talking about. They helped to create that system. And so what they're saying is that, hey, this is completely opposite of what we've been knowing and what's been based on America and Europe's growth. So now you're going to have to face it. So it makes sense that you're going to have double the time of the recession, because you can't get control of both things. You're going to have to lesser of two evils, right? And you choose that. And the Fed is obviously, they're not lowering rates, they're hiking them. So, they've kind of already chose. So that goes unchecked, and then it leaves us where we're at now.
Yep. And to prove the point as we close out, for investors, Jensen warned, this means there aren't many solid places to hide at the moment. So, as always, gentlemen, I appreciate y'all hopping on. That's our 30 minutes. We're very big on respecting people's time. We told you 30 minutes. That's what we're going to sit with. So, Coach Cam, appreciate you. Gentlemen, please say goodbye.
Yeah. Hey, guys, appreciate y'all. Look forward to seeing y'all again.
Much love for everybody. Appreciate everybody joining in. We out.